Hey everybody, hope you're having a great day. So I just wanted to jump on real quick and kind of go through what I look at. I've been getting a lot of questions lately, DMs from a lot of you guys on what I look at when I'm looking at a chart. So from the get-go, a lot of my investing decisions are made off fundamentals and, analyzing a company. But before I do invest in a company, I do look at charts, so I do use them. I'm not a technical trader per se, where I only make investment decisions on charts like some folks choose to do. That works for them. Not something that I use a ton, but again, I base off fundamentals, and then I also look at the charts before kind of seeing if there's a trend that I can see. So I figured one I would pull up for you guys, and one common question I've got a lot is Amazon, obviously a very popular stock. So I have their chart here. I use TradingView. They have a free version that you can use where you only get 3 or 4 indicators at once. If you want more, they have a subscription that you can purchase, but I'm sure you can go there and figure out that. But I know it's not too expensive, but the free one works for me, so that's what I use. So kind of at the top there is where I keep the RSI indicator that gives me momentum indicator based on if a stock is looking overbought or oversold. Usually the areas are between 70 and 30, which is how I have it set up. You can see this kind of purple shaded area is between 70 and 30 here. So anytime the stock kind of gets out of that box is telling us usually that the stock is overbought, meaning it's kind of got ahead of itself, it's looking frothy, and it needs to kind of come back to reality in a way. But as we've seen kind of since end of June 29th, the stock is kind of it's like stairs. It goes up each and every day. It's like the stock doesn't really know how to go down. So it's kind of had a nice little run these past 2 weeks or so. Really, it's had a nice run going back years, but it's had a solid bounce these last couple weeks. But kind of seeing where it's at now in terms of the RSI is trading near 80, which is well out of the box. Kind of is that first indicator, that flashing warning light saying this might not be an ideal time to jump into a position of Amazon. So next here, we just have the normal chart. I use the candle chart here. Really what candle are, you can kind of see. These are by day. You can kind of change it to really anything you want. You can go to minutes, you can go to seconds, hours, days, weeks, months. But the range I use is a day, and we're kind of looking, really this whole thing is kind of showing year to date. So those of you not familiar with candle charts, each day here you have a candle. You can kind of see there's little legs on the ends, these little skinny lines, and then there's that the meat or the fat in the middle, which is really the candle. So you got the wicks on the outside and then the candle in the middle. The filled in part, the candle part, tells you, so if it's green, that's telling me the stock went up that day. So the bottom of the filled part is where the stock opened. The top of the filled part is where the stock closed. For these skinny indicators that are below or above those filled in part, that tells you the range. So today the stock traded as low as 3,074, but it opened at 3,115, because that's where the kind of the bottom of that candle part is. It traded as high as 3,193, but it closed at 3,182. So really it closed towards the high end of the range. But so that's kind of the candle charts. I like to use those. Some people just like the regular line graphs, which are helpful to see certain trends. So the indicator I use here is a 20-day moving average. So that kind of tells us where the stock has been for the last 20 days, and it's usually a pretty solid indicator. It's a solid trend line, I should say, for a lot of stocks. So you can see here Amazon kind of trades pretty close to that 20-day moving. March is you can kind of throw that out because That's kind of when the pandemic hit. But once we started getting back into things, you can kind of see it grooving along, kind of got ahead of itself like it is now, had some consolidation, let that 20-day kind of catch up, and then it started again, just trading, muttering along just right along that 20-day. But now you can kind of see how the disconnect is. We haven't seen a big disconnect like that since February or April. So what that tells me is, one, the RSI is telling me it's overbought. Two, I'm seeing a big disconnect between the 20-day and the actual price. This is it's trading at an all-time high, so there's no real support or resistance levels I can draw. That's kind of what these colored lines are that I kind of look at. I know I've got a lot of questions on those, on how I determine those. So really, all I am doing, let me see if I can get some drawing here for you to kind of spotlight. What I'm doing is I'm looking at where stocks they usually hit these resistance walls or they find support when dropping. So you can kind of see, let's find a good example here. Let's use this 2309 section here. So this line was a resistance line before. The stock, you can see, kind of bumped up against it right here. Didn't kind of get through it. The next day we got through it, but it closed below that 2309. So 2 days in a row. Once you break a resistance, you usually get a nice little gap up in shares. So we got a nice gap up here in mid-April, and then you're going to retest it. Let's see if that resistance now comes support. So you can see the stock the next day traded right down exactly to that 2309 level, closed back up. We once again tested that. They actually broke through that new support line, but it closed right at it. So you're building a new support line now. 2309 is a new support line. So that's how I got the green line. So next, then I go, okay, well, let's see where our resistance is. So it's really that 2473, 2475 range. The stock got close here in late April, kind of bounced up against that line and closed lower. It retested it again here, couldn't get through, and it fell back down. So when stocks kind of trade up to those resistance lines and don't break through that resistance, you usually see a pullback. So that's what it did. We pulled back. Again, we were getting away from our 20-day, hit resistance, and pulled back right in line with where the 20 is going. So we waited. The stock kind of consolidated, not huge moves until, back in mid to late April, once again, right up to that 2475 line. You can see here, bounced up to it and came all the way back down and closed at that 2450 range. The next day they were right around it, couldn't get through again. So again, now we're moving back in this direction. Now we get to June. The stock's going to go up and it tests that 2475 for 3, 4, 5 straight days. Couldn't get through. It got through in the intraday, but couldn't close above. We want to see a full, healthy, clean close above, and the next day that level to hold, which hasn't been the case until we get here. What is this? Around the 10th of June, stock finally breaks through, and you can kind of see the big move up. So now we're going to go up to now we have a new resistance line. So 2475 now looks like a clear support level for the stock. It traded above it for more than a week, got ahead of itself, disconnected from the 20 days. So we're going to see naturally it's going to come down, but it's going to bounce right off of that 2475, which you saw the 20-day converging with it. So these are just kind of the trends that you can kind of see a stock can do throughout its life. But right now you can kind of clearly see that the stock is very disconnected from the 20-day. The RSI is trading up here at 80. Big difference between the 20-day and the current stock price. So now we're going to go down here to the MACD. Again, another kind of momentum type indicator that I like to look for. This blue line is kind of what I'm watching. I'm watching for it to cross over the orange. That's usually bullish move for the MACD. So right here, you can clearly see the blue indicator. We're getting momentum in the stock. Stock was trading at these levels. It made the crossover, and boom, we're right up here again. Once that MACD as a bearish crossover, though, you can see the stock is trading up here at the February highs. Again, this was during the COVID thing, but the stock goes straight down in that bearish move. So we'll kind of toss out March just because this pandemic is not a normal thing, but we kind of bottomed obviously in March when the whole market, but you can see the indicator. You can use these indicators to see when that bottom is. So kind of right around this range is when that MACD again made a bullish crossover. You bought here, and you could see it just ran up until we got a bearish crossover again. There we are right there, and the stock traded down. So these again are just indicators that I look at right now, where it's a kind of a big disconnect. So we have a big disconnect on the RSI. We have a big disconnect between the price and the 20-day, and we have a pretty big disconnect in our MACD. So right now, kind of the warning lights that are coming at me is saying, right now, based on the technicals, it does not look like an ideal time to jump in shares of Amazon. So again, just wanted to kind of do a quick video for you to kind of show you what I look at. Again, I'm no technical expert. There are other folks out there that kind of are able to look at the various stock patterns and, the head and shoulders patterns and the cup and stuff like that. That's getting into another level that we won't do on this video, but really me personally, these are kind of the main items that I look at when using charts before investing in stocks. So hope you enjoyed the video and hope you have a great day. All right, bye-bye.